We have word now that the Fed decision is about imminent. Our Lindsay Arendt is standing by in the Treasury newsroom with the latest details. Apparently, just a slight bit of a delay in the reading of that statement today. We were talking with Alan Blinder and Vince Reinhardt, and I know, Mike, you wanted to get in.
Well, I don't know if we have time to ask him a question, but I can tell you that what they do in the Fed room, the Fed doesn't have a press room.
No
so
change. No change. Bloomberg Television. The Fed funds rate remains at 0 to 0.25%. As far as the Fed's $1.45 trillion housing debt purchase program, the committee will gradually slow the pace of these purchases to promote a smooth transition in markets. Committee also anticipates they will be executed by the end of the first quarter of 2010. That's 3 months later than previously expected. As far as economic conditions, the FOMC says economic activity has picked up following its severe downturn. Conditions in financial markets have improved, and activity in the housing sector has increased. The statement goes on to say, although economic activity is likely to remain weak for a time, the committee anticipates policy actions will support a strengthening of economic growth. As far as inflation goes, the committee expects that it will remain subdued for some time. And as far as the votes, they were unanimous. Once again, though, the Fed funds rate remaining at a target range of 0 to 0.25%. Fed continues to anticipate that economic conditions will warrant exceptionally low levels of the Fed funds rate for an extended period. Back to you.
Well, Mark, it looks like you got exactly. We could have written the statement ourselves with Alan and with Vince Reinhardt. Almost no change at all in the way they phrased the statement. They just said that economic activity has picked up following its severe downturn. That's about the only change, coupled with the announcement about the mortgage-backed securities, which was widely expected in the markets.
And I guess we all agree, which it was not unexpected.
It was not unexpected, and so it probably won't. We'll check with Brian Luke in a few moments, but it probably won't have much of an effect in the markets because of that.